Hey everyone, welcome back to the channel. Did you know that the UK's national debt is over £2 trillion? Yes, that's trillion with a T. So, what does that mean for you and me? And more importantly, how did the UK end up with such a massive debt in the first place? In this video, we're diving into the UK's debt crisis, breaking it down, and explaining how it impacts the economy, public services, and your future. Stay tuned because this is something you'll want to understand. The UK's national debt has been a topic of growing concern for years. It is easy to hear numbers like £2 trillion and just assume it is something happening far away, affecting people who don't really impact your daily life. But in reality, this huge amount of debt affects everyone, from the public sector to the economy, and even your pocket. In this video, we're going to break down how the UK's debt got this high, why it matters, and what could happen if things don't change. Let's start with the basics. What exactly is national debt? Well, national debt is the total amount of money that the UK government owes to its creditors. This debt comes from borrowing through government bonds, loans, and other financial instruments. Essentially, it's how the government funds itself when it spends more money than it collects in taxes. Now, to really understand the scale of the debt, let's break it down further. The UK's national debt has been rising steadily for decades. It started to spiral upward after the 2008 financial crisis, and it hasn't really slowed down since. In fact, during the COVID-19 pandemic, the government borrowed more than ever to fund things like furlough schemes and support businesses. So why is the debt so high? Well, there are several factors at play. First off, the government's spending has increased massively over the years, from healthcare to defense, pensions to infrastructure. The UK government has had to fund a variety of public services, and some of them are incredibly expensive. The UK also has an aging population, which means more people are retiring and drawing pensions. This places more pressure on the government to fund these costs. As more people retire, fewer people are paying taxes, which creates a funding gap. To fill this gap, the government borrows money. On top of that, the UK government often spends more than it earns. This deficit spending means that each year the government borrows to cover the difference between its expenses and its income from taxes. The problem with this approach is that it results in compound interest. You are paying interest on the debt, which makes the debt even harder to pay off in the future. Now, let's talk about what this mountain of debt means for the UK economy. When a government borrows money, it has to pay interest on that debt. This can take up a huge chunk of the national budget. Right now, the UK spends billions of pounds every year just on servicing its debt, which means there's less money available for other priorities like schools, hospitals, and roads. This can lead to what economists call a debt trap. Essentially, the government keeps borrowing to pay off the interest on previous loans, leading to more borrowing and more interest. It's a cycle that can be really difficult to escape from. And there's another concern: if the UK's debt gets too high, investors may start to worry about the government's ability to repay. This could lead to higher interest rates on future borrowing, making the debt even more expensive. Plus, if investors start pulling their money out of UK bonds, the country's economy could take a hit. So, what happens if the UK doesn't get its debt under control? Well, there are a few potential consequences. First off, there's the risk of inflation. When a government borrows heavily, it can increase the money supply, which can lead to rising prices. This erodes the value of your savings and makes it harder for people to afford everyday goods and services. Next, there's the impact on public services. With so much of the budget going to debt repayments, there's less money to spend on things like healthcare, education, and social services. This could result in cuts to vital services that many people rely on, leading to dissatisfaction among the public. And then there's the long-term risk of a debt crisis. If the UK's debt grows uncontrollably, the country could eventually face a situation where it has to either raise taxes or cut spending drastically, or both, just to keep up with debt payments. This could trigger social unrest, economic stagnation, and a lower quality of life for everyone. But it's not all doom and gloom. The UK government has a few options to manage its debt and avoid the worst-case scenario. First off, it could focus on growing the economy. If the economy grows, tax revenues increase, and that reduces the debt-to-GDP ratio, which is a key measure of how manageable the debt is. Another solution is reducing government spending. This is always a difficult choice politically, but cutting unnecessary spending could help free up money for debt repayments. Of course, this would mean making some tough decisions about which services to prioritize. Lastly, the UK could look at raising taxes, though this is also a contentious issue. If taxes are raised, it could reduce consumer spending and dampen economic growth. So any tax increases would need to be carefully planned to avoid damaging the economy further. In the end, the UK's debt is a complex issue that doesn't have a simple solution, but the bottom line is this: the longer the debt continues to grow, the harder it will be to manage, whether it's through boosting the economy, cutting spending, or raising taxes. Something has to give. So, what do you think? Can the UK manage its debt, or is it heading toward a financial crisis? Let me know your thoughts in the comments below. And if you found this video helpful, don't forget to hit that like button and subscribe for more content on economics, finance, and current events. Thanks for watching, and I'll see you in the next video.